I hope that you can see how important correlation and understanding correlation between various currency pairs can be to your trading. These correlations can also be used when looking at levels of support and resistance. So for example, we'll pop here to a daily chart, and we'll just run into this as a sort of an added little uh, level of bonus coverage. Okay, let's draw this. Okay, horizontal line here. Also, I'd like a corresponding horizontal line there. Okay, so these areas where the price can't get through or doesn't go through, don't say can't, never say can't when it comes to the market. The price seems to be tough. It resists going through the top of that. That's a level of resistance there. Now, the opposite is true when the prices seem to not be able to penetrate a bottom. That's an area of support. When you're using correlation, you can see how these line up down here in that same time frame, right around here, right around here, as you can see on both those charts. It's resistance up here at the top, at the same time support, and that becomes a turning point in which the market begins to travel in the opposite direction. And levels of support and resistance, some people believe they are sort of self-fulfilling prophecies that folks who use technical analysis swear by. But the reality is, you can see there are certain levels where, self-fulfilling prophecy or not, where the price seems to bounce off this invisible ceiling, if you will, and it seems to bounce off this invisible floor. And looking at these types of prices and levels gives you a lot of insight into things which may happen at some point in time in the future. So moving even aside from correlation trading into just straight levels of support and resistance, I'm going to increase the size of this chart so we just see the euro dollar US dollar here. Okay, you can see we bounced off this level. This is a daily chart. Okay, now give me another level here. We bounced off here, went back across, all the way back up to the top. We actually penetrated, but you can see this here, this candlestick pattern. We moved back down. We tried to penetrate again, and we came all the way back down to this level. Now, everyone who follows support and resistance will be looking for things to stall out at this particular level. And as you can see, they did, because we had a big bounce up, almost, well, it was past the halfway point of the previous day. We had a big bounce up, and then we started back down again. So we may see that prices may attempt to penetrate this level and go further down. Then the next point to look for would be down here. So support and resistance gives us a number of things to look at. And one of the important things is a level of risk and reward. So say, for example, we're up here and we travel down, we come down here, and we're moving back up. So we've identified this as a level of resistance, and we're wondering, okay, how much can we risk if we wanted to go short? I mean, you start to see the spinning tops, the candlestick patterns here. which are indicating that this upward trend is exhausting. That's basically a doji right there for all practical purposes. And we're expecting price to come up near here and bounce down. So if you were looking to get long in this area, for instance, you already see that there's resistance up here. So if you're already looking to get long and there's a possibility there may be a bounce off resistance, then your reward is not that great. Whereas the risk on the short side from here down to this level of support is pretty huge. It's pretty huge. Okay, so that makes perfect sense. You can see this for yourself, and these levels are true really regardless of the market. I'll pull another market over here, and we can draw some levels so you can get a quick look at what's going on. Let me turn off auto return there. And say we'll just go back a ways. Okay, and let's look at our resistance being up there, our support being down here, and let's go by here one at a time again. We bounce off. We're moving up nicely. Now you'll notice this may be a more major level here, and as we come down further, other levels come into play. Okay, you can see this level here moves up, bounces off that level, comes back, bounces off that same level that we previously identified. Let's see what happens as we move on. Okay, bounces off the level, goes up, doesn't quite make it, comes back down. It's pretty even along here. This period in which the price moves back and forth is known as congestion and consolidation as well. Those are two names used for it. This entire corridor can actually be considered a huge channel of congestion. Now, as you can see, stalled around here long enough without going up. Sometimes that's an interesting sign too. Okay, and move down nicely. Okay, so we're going through and we're drawing levels of support and resistance as prices change. Okay, here we go. We have new support there, new resistance there, falls down through, new support right here, and it narrows along and we just kind of meander around. Okay, so if you're looking here to get short, then the possibility that you get short and it run all the way back up here is strong. And so you have to look at the chart and determine if that level of move from here to back here, if your stop's back at this point, if it's worth it for you, if that works out for you. In this case, that's about 170 pips. So that's within acceptable using the 1/10 of a standard contract size, as we had discussed before, for the amount of our demo account. Okay, we're going to pop this back up here, and we're going to go back to our original chart here. And again, these principles are applicable using any time frame and any currency pair. That makes them extremely useful and universal. Go back to our standard chart. Okay, daily, that's going to be 4 hour down there. So what we've covered is setting up our MetaTrader software, first downloading and installing. We've covered the file menu, the insert menu, installing and activating indicators. We've also covered basics of MetaTrader charts, as well as an introduction to the all-important risk control. We've had quick start tutorials as well as some sample trades with inside bar breakouts. We've looked at channel breakouts. We've looked at support and resistance. We've looked at a number of different things here. We've looked at how to actually place orders. We've looked at controlling our risk, which is quite naturally of paramount importance. We've looked at lots of things here. So we've covered the basics of what you need to trade successfully. And in reality, you could use something as simple as the inside bar breakout and be wildly, wildly profitable. So you have the basis right here and right now to experiment. And with a demo account, you can experiment with no financial risk to you. One word of caution with regard to a demo account is that don't get wild in the demo account. Okay, what I mean by that is that you should keep your risk at the same levels that you will have them when you trade your actual account, when you open up your real money account. So if that happens to be 3%, don't risk 30% in your demo account. Practice makes perfect. And if you practice the right things, you get better at doing the right things. And there is nothing that's going to be more important than controlling your risk. That will keep you in the game. It will definitely keep you in the game. Keep in mind also that sometimes being diversified is more, let's just say there's more to it than meets the eye. It's more important to realize whether you're diversified, even though you're trading two different currency pairs, as we had our example with using the Euro dollar, US dollar, and the US dollar Swiss franc, which, as you can see, they have a very strong correlation to one another in the opposite direction. As one goes up, the other goes down, and vice versa. Keep that in mind. That will also, correlation also allows you to control your risk. So we've covered this. You have all the tools right here at your disposal to start performing your own tests, giving your ideas a workout, and make sure you keep meticulous records when you do this. That's very important. This way, you won't be fooling yourself, because when you try something, you want it to work. This is typically how it works. Keep this in mind, okay? Keep this in mind from this training, and take this away. When you're going through an idea and you're seeing something, it can be on any particular chart, could be Euro dollar, US dollar, 1 hour, and you have certain ideas about where to get in and out with support and resistance. Write down what your idea is, and write down what you want to test and why, and also write down your results. Don't skip any bad results. In fact, take this bit of advice. When you have an idea or a method or trading system, your objective really is, in testing, is to break it. You start off and you trade with it, and you look for its vulnerabilities, and if you find a system that you cannot break, That sounds like that's a very good system to trade. Listen, it's been inspiring to be able to share our Forex experience and trading expertise with you. We thank you very much for your participation in this Forex course. Good trading and best wishes to you. Thank you.